What's up traders, Sasha Gogolin, Second Skies Trading, and we're back with another top trade review video here for you, where we once a week take a closer look at a trade taken by one of our advanced price action members using the methods that we teach inside our course. And in this video we're going to look at the exact price action context leading up to the trade, the exact entry, stop loss and take profit details, and also potential improvements that we think could have been made to this trade, so you can see how we teach our members and students to make money trading. And today we're going to look at a monster trade here on the pound yen taken by our member Lewis. And if you remember, Lewis was already featured in the top trade review here in the beginning of July, where he crushed it for more than 4R on the euro pound. And if you haven't seen that video yet and would like to check it out, simply click on the link in the top right corner that will take you to that video. That said, let's have a look at his trade here. And on the screen here you can see the post that Lewis made inside our members area, where you can see the trade details along with a chart showing his trade, his entry, his stop loss and take profit. And so he got in at 135.277, his stop loss was at 134.90, and his take profit at 139.078. So total return of 380 pips, which is fantastic. And in terms of R multiple, meaning the risk versus the reward, he made 10.1 times his risk on this trade. So an R multiple of 10.1 on this trade. And that means that every $1,000 risked on this trade would have returned a profit of $10,100. And the overall holding time here was 4 days and 4 hours. And Lewis also attached this screenshot here from his broker, where in the top left you can see that's a real account. On the chart here you can see his entry at 135.277. You can see its stop loss here at 134.90, which is this little red line here, and his take profit up here at 139.078. So all the trade details here match with his post. So now that we have looked at all his trading information here about his trade, let's dive into the price action context. But before we do, please make sure to hit the like button if you like our content, to support our channel so we can continue and do free material like this for you. And also, if you would like to get notified immediately when we release new content, make sure to subscribe to our channel. With that being said, let's head over to TradingView and have a closer look at the price action context here and why Lewis took this trade. TradingView is our preferred charting platform that we do all of our analysis on prior to taking any trades. And if you would like to learn how to use TradingView, we do have a 30-minute tutorial on how to use it and the advanced features of TradingView. So if you have not seen that video yet, you can click on the link in the top right corner. And on the charts here you can see that I have 4 time frames. I have the weekly, the daily, the 4-hour and the 1-hour time frame. And I've marked Lewis's trade here showing his entry, his stop loss and take profit. Now, starting with the price action context, looking at the long-term context, we can see here on the weekly chart that price has been in this massive long-term range back since 2016, and in March we did hit the bottom of this range again. That led to a strong bullish reversal and then this kind of volatile follow through here by bulls. And after this strong bearish rejection here within this up move, that is when price action got really interesting, looking at a short-term and mid-term perspective, and for that we can use the 4-hour time frame. So looking at it here, you can clearly see this is the strong reaction here from the multi-year range bottom. It's a double bottom, and then we have this impulsive buying here and a stronger buying following through here. And if you then look at this one here, once this key swing point had formed here, the selling was much weaker compared to the buying here, with this pullback not even making back 50% of this buying here. And what stands out inside of this corrective pullback here is that price was forming this kind of support within this pullback, where price found support 1, 2, 3 and 4 times. And this was then again followed by impulsive buying out of this corrective structure. And this impulsive move was then followed by another corrective pullback here, and we can kind of see the same pattern here repeating itself again, where price bounces here from the bottom of this corrective pullback, then trades a little bit lower, bounces again, but we can see that it happens roughly at around the same area. And we mark this area here. You can start to see why Lewis got in where he got in and why he took this trade. And this price action context is something that we have discussed frequently with our members, both in the market commentary that we have live in video format on the weekends, but also throughout the week, where we post kind of daily trade setups for our members, where we highlight key structures in the charts that we see every week and every day and share that with our members to highlight, hey, here's a potential trade opportunity coming up. So I'm really happy that Lewis took advantage of this price action context here, which was really strong and high probability one in my opinion. And going down to the 1 hour time frame, looking more in detail here at this support, you can clearly see that it acted here as support on the 22nd of July. Price came down here again and rejected 1, 2, and 3 times. And after that, it was then when Lewis said, hey, I want to get in here. If price makes it back down to this short-term support again, I want to get in here. I want to have my stop loss below this zone here. So a really good entry here from Lewis in my opinion. And in terms of his target, he said that if this impulsive and corrective structure here, where you can see this impulsive, corrective, if this is playing out and if this is holding, we can likely expect a move all the way back up to this key swing point up here from the beginning of June. And this is where he placed his take profit. So all in all, really well played here by Lewis in my opinion, taking advantage of this impulsive corrective sequence here. So really well done by Lewis here. Personally, I also took advantage of this price action context. It was way too good to be missed. So as you can see here on the broker's chart in front of you, I also got in very similar to Lewis here. I got in at 135.226, so roughly 5 pips lower than Lewis did here, but I managed to trade a little bit differently because I was involved in multiple pound trades, so I managed my exposure and my risk a little bit differently here on this trade, taking partial profit. So in terms of profit, Lewis definitely beat me to it here, so really well played by Lewis here. And just looking really briefly here on the higher time frame context, you can see how nicely this trade lines up with the overall context here. You can see price being carried by the dynamic support here, which is the 20 exponential average here on the chart, which is this yellow line. Price was not able to close below, just penetrated it briefly with some wicks, but was not able to close below here since the beginning of July, and the same happened here over and over again. And once price pulled back to the EMA here, using the lower time frame context and the structures to take opportunity of this trade, you can see how nicely it was rejected here, and then just strong follow through by the bulls immediately after Lewis entered this trade here. So overall, an amazing trade in my opinion. Now in terms of improvements, starting with the stop loss, I think it was a really well chosen stop loss. As you can see, we marked this zone here already on the charts before. This is the kind of support zone where price pulled back to initially, and you can see it held really nicely. So as we teach our members, have the stop loss below the support or resistance zone that you're attacking and give it a little bit of buffer. So in terms of stop loss, it's a really great stop loss in my opinion. In terms of entry, I think it's really well chosen entry as well. He could have gotten in a little bit lower, like I did here at 226, but then on the other hand, if you see the first rejection happened over here, and that is where Lewis wanted to get in, so that is the highest probability entry location that he chose, because that is where price initially reacted from. The deeper you go into the zone, the lower the chances are of your entry being filled, so that reduces the chance of your order getting triggered and increases the chance of you missing out on the trade. So the deeper you go, the bigger the chance is that you miss out on the trade. So he went for the highest probability entry here on this trade. Gunning for a deeper entry the way I did and going for an entry, let's for example say my entry here 226, he would have increased his overall R return to 11.82, so 1.7 R more on this trade. But then again, if you go for a deeper entry, you increase the chance of missing out on the trade. So I think his entry was also really well chosen, and it was the highest probability one. In terms of take profit, he could have gone for the extremes here, the extremes high of this key swing point here. But then again, you can see where the rejections come in here. The wicks here is where the bulls got rejected by the bears. And as we teach inside our course as well, take your profit a little bit ahead of support or resistance, because the orders are often stacked in layers and start coming in slightly ahead of areas of support and resistance. So again, a really well chosen target here. So overall, I give Lewis here an A+ on this trade here. There are some minor things he could have done to improve, but on the other hand, there's a trade-off where he could have missed a trade, or his take profit could have been missed because it was too wide. So overall, across the board, an A+ trade here in my opinion by Lewis. So congrats to Lewis here for making it to the top trade review for a second time around. And we are at the end of this top trade review video. I hope you enjoyed it. If you did, please make sure to hit the like button, help support us, help our channel to grow. That enables us to make more free content like this for you every single week. Also make sure to subscribe in case you want to get notified once we release new content. And also if you want to learn more how we trade and how we teach our traders to make money trading, check us out at our website secondskiesforex.com, where we have tons of free articles, free trading tools, a free ebook where you can learn one of the core pillars that we use on a daily basis to identify high probability trading setups. If you do have any questions or comments, please make sure to post them below the video and Chris and I will get back to you. And other than that, see you next week for another top trade review. And until then, we hope you enjoyed the video. Chris and I look forward to your comments and questions. Have a fantastic weekend and good luck trading, everyone.